Hello and welcome to Thursday's Fat Tail Daily video where we discuss the key idea in the daily insight of the day. And today I have the pleasure of being joined by Brian Chu, our gold stock analyst. Brian, welcome buddy.
Hey Woody, how you going?
I'm good. And talking of gold, you're currently I think you're in a nice hotel in Sydney, right, for the Gold Investors Conference? I'm not quite sure of the exact name.
Yeah, so it's the Australian Gold Conference, and we are actually filming this a little earlier because I want to focus on the conference proceedings. So I decided to record this at the conference, which is on a Wednesday, and I'm presenting in about an hour's time.
Good stuff. And hopefully we'll get a copy of your presentation so we can share it with Fat Tail Daily readers. But I wanted to just talk to you very quickly on your piece today. You highlight the paradox of rising gold prices but lagging gold stocks, right? Can you elaborate on why this disconnect has even occurred in the first place and how long you expect it to last?
Yeah, and it's interesting because years ago when I started investing in gold stocks myself, I thought that if gold goes up, then gold stocks are going to follow suit and it will multiply its gains. But it didn't really happen the way I had hoped and most people would imagine. So in 2013, 2014, I was just buying gold stocks and they came down and I was wondering, well, when's this going to end? This time round, with the benefit of experience, I see gold going up, gold stocks not going up, so I know which indicators to look for. And the inside scoop between you and me and also our viewers is firstly, it's about profit margins because you're buying shares for the future potential of these companies. And what is the future potential? Well, the best indicator of what happens in the future is right now because people are using information that they know. So if the company generates good margins, the market generally expects that could continue. And that's why they're willing to pay a higher price. Gold at the moment has been going up, but gold stocks, because they were held down by oil, the price of oil and inflation, they have actually lagged for the reason that the operating margins have gone backwards only until this year that has started reversing.
Do you want to say, my next question was how do you see that evolving? How do you see those operating margins evolving in the near future, especially considering in the context of things like rate cuts, which are expected to come, and in the face of ongoing inflationary pressures?
Yeah. So if you look at the graph in the article, you'll see that the operating margins in 2018 to 2020, it was rising from about the average of 35% to almost 45%. Then it started turning back down, especially in 2022 and 23, when the economy digested the rate rises, the border restrictions, the labor shortages, and mining companies operating on a smaller team. So they were facing higher costs, which went up faster than the price of gold rising. Now in 2022, furthermore, to make things worse, gold came down because the central banks all raised rates and made the currencies slightly more valuable relative to gold. So the margins fell from 40%, over 40% to as low as 29% last September. That turned around recently, and the good news is in the June quarter we just had, the margins have increased to 42%, which I'm really excited about because that's similar levels to 2020, and gold and the ASX Gold Stock Index is trading at just 12% below its all-time highs in 2020. So I'm very excited about where this is going, given the momentum of gold and gold miners now starting to get into the rhythm of things, they're getting into the groove of things.
Gotcha. Yeah, no, you do actually mention that gold stocks might break out above their 2020 highs in the coming year. But what specific catalysts or events do you think could trigger that move? And crucially, are there any potential risks that could derail that prediction?
Yeah, that's a good one. The key thing that drives the entire economy at the moment is the Federal Reserve. And they've been talking about since last year that they're going to start cutting rates. They've been shifting their positions from 3 cuts to 6 cuts to 1 cut to no cut to 1 cut to 3 cuts, etc. Now it seems like the economy has truly slowed down. Inflation is also decelerating. Prices are still going up, but at a slower pace. And the Federal Reserve is now forced into a corner as the normal businesses and the ordinary households are suffering under higher living costs, jobs are shrinking, more people are fighting over scarce resources from a supply chain collapse. And the Federal Reserve looks like they might cut rates for the first time in September. Mm-hmm. And once they start cutting, just like Pringles, once you pop, you can't stop.
Thanks for that, Brian. That's insightful. Good analogy too. Although I don't particularly like Pringles myself, but given the current, we'll make this the final question because I know you've got to get ready for your speech. But I wanted to ask you, given the current market conditions, how would you more broadly advise investors to approach building a precious metals portfolio? Like, are there particular types of gold stocks or companies that you believe are better to position to benefit from the trends that you've identified?
Yep. So my view is, right now, gold stocks are starting to pick up pace. The larger producers have had a good run from October 2022 till now. Some of the leading companies have started heading towards all-time highs, and the mid-tiers, the better performing ones, are actually breaking records because mid-tiers, in my experience, they actually perform better. They have the better reward to risk trade-off, and that's why they're actually getting more market attention. The smaller end of the market, so the developers and the explorers, they're starting to now move up, make a rally, but the bulk of them are still close to the cyclical lows in the last 2 to 3 years. It has not been easy, and some of my newsletter readers in the premium newsletter Gold Stock Pro, they are actually they've enjoyed some wins. We've taken some profits even during these hard times. Mm-hmm. And but the bulk of the recommendations, I've asked them to sit on it, wait for them to pop, and we are actually seeing even today some of these companies making double-digit percentage gains. So with the larger producers, which we cover in the Australian Gold Report, we're encouraging people to accumulate, take a little bit of profits on the leaders, and shift it into the mid-tiers and start taking a bit more risk. I believe in the next few months, should the ASX Gold Index continue to break above 9,000 points, we're at 8,500 right now, the general market will start paying attention, and when they clamor on board, these things can fly, not guaranteed, but experience shows it does, and we will be riding the wave up. At that point, when everyone starts coming in and they're saying buy gold stocks, we'll be quietly taking some profits and enjoying the rewards of our patience.
Oh, there you go. Thanks, Brian. I'll let you get off now because I know that you've got a few things to prepare, but that was very insightful. Thank you. If you're watching on YouTube at home, please do subscribe to the YouTube channel and you get notified whenever a new video comes up. And as always, if you're on the website, check out, if you don't get Fat Tail Daily in your inbox every day, there's a sign up page on this page somewhere. I'm not sure where to point to it, but you'll find it. And then you'll hear from Brian every Tuesday. So we'll catch up on Tuesday next week. Brian, you can tell us all about the Gold Conference in detail. And good luck with your presentation.
Thanks a lot, Woody. And everyone, God bless. Take care.
Thank you. Cheers.